This is Brad Keithley, Managing Director of Alaskans for Sustainable Budgets. Welcome to the weekly top three, the top three things on our mind here at Alaskans for Sustainable Budgets for the week of August 3rd, 2026. The weekly top three is a regular segment on the Michael Dukes Show. The show broadcasts on both Facebook Live and YouTube Live, as well as via streaming audio from the show's website, weekdays from 6 to 8 a.m. I join Michael weekly in the first hour of Tuesday's show from 6:10 to 7 a.m. for a discussion between the two of us about our three issues. We post the podcast of our discussion following the show on the Alaskans for Sustainable Budgets Facebook, YouTube, SoundCloud, Spotify, and Substack pages, also on the Alaskans for Sustainable Budgets website, as well as the project's page on national blog site, medium.com. You can find past episodes of the weekly top three also at the same locations. Keep in mind that in addition to these podcasts, during the week, you can also follow and participate in the discussion with us of these and other issues affecting Alaska's fiscal and economic condition by following us on the Alaskans for Sustainable Budgets Facebook page and through our posts on Twitter. This week, our top three issues are these. First, we discuss some potentially troublesome developments with ANS oil prices. Second, we review some of the numbers behind the concerns about the reliability of Southcentral gas deliveries this coming winter. And third, we explain why a recent op-ed from Adam Crum demonstrates that some Republicans are part of Alaska's ongoing budget problems, not the solution. And now, let's join Michael.
Brad, we're going to start off this morning, and boy, I'm kind of looking forward to where we're going with this because there's some really interesting stuff out there. Let's talk first about the potentially troublesome developments with Alaska North Slope oil pricing. We've heard, things going up and down. The war's on, the war's off. The straits are open, the straits are closed. Gas is coming, gas is not. What is up with ANS crude pricing? Let's get things started here.
Well, Michael, on both a weekly basis, a running average of 4 weeks, and on a monthly basis, a running average of 12 months, we keep track of ANS pricing versus Brent pricing versus WTI pricing. Brent is the waterborne price, the world waterborne price. WTI is essentially the internal U.S. price, production from the Midwest, Southwest. And then ANS, of course, is Alaska North Slope. And we keep track of the relationship between those three. And there's something really interesting going on that is going to have, if it continues, it's going to have some implications for the FY27 budget and maybe beyond if it continues. I've got a chart that is going to be an eye test this morning. I don't intend it as an eye test. No, but please don't try to read this chart on Facebook or YouTube or whatever you're watching on. But what this chart shows is the heavy maroon line is at the top is the ANS price, and then I've got the Brent and the WTI and the WTI line, the WTI prices in lines. What's going on that's interesting to me is in the bars. The bars represent the differential between ANS and Brent, and represent, if ANS is higher, the bars are positive. If ANS is lower than Brent, the bars are lower. And the reason I keep track of this is our budgets, the Alaska budgets, are done on Brent. So when you see a projection for the FY27 budget of X price, that's really the projection of Brent. And the reason we use Brent is because there's not that big a difference historically between Brent and ANS. Sometimes ANS is higher, sometimes it's lower, but the differentials, if you look at the left side of the chart, the beginning of that chart, you can see the differentials aren't that big. There you go. For the bulk of the year, the differentials between Brent and ANS have not been that big. ANS has been up a little, but not much. And so when you look at the budget, you can see, all right, we're keeping track with Brent. Brent is different than what was projected in the budget, but at least we're keeping track with Brent. What's happened with the war in Iran is as you would expect initially, ANS spiked. The ANS price is really the U.S. West Coast price, the U.S. West Coast spot price, and the U.S. West Coast is really the tail on the dog of Asia, the Asian price, the Asian Pacific price. And so when Hormuz started, when the closing of the Strait of Hormuz started, all of the supplies that would go from the Strait of Hormuz to Asia, and that's the bulk of them, got closed in, got cut off, and so ANS developed a premium because in the Asian markets they didn't have access to the Hormuz volumes. They needed additional volumes, and so they started bidding up ANS to supply the Asian markets. In fact, we had 3 tankers, all Exxon tankers, interestingly enough, but we had 3 tankers of ANS that went to Korean and 1 Japanese market in the May-June timeframe. And so that was sort of expected. And what that told you was that during May and June, when those prices were going up, that we were ending up with additional dollars for ANS, additional revenue to the state for ANS, because ANS was selling at a premium to Brent. What's happened since is what's really fascinating to me. And you look at Hormuz being closed over the period of time, and ANS being strong, ANS being at a premium to Brent, and then all of a sudden in July, ANS drops, and it doesn't drop back into its normal relationship to Brent. It drops below Brent. Indeed, it even drops below WTI, which is West Texas Intermediate, which is something that you very rarely see, and usually see it on a day or 2 or 3, as opposed to a sustained period. But what we've seen is ANS drop significantly. On one day, it dropped like $11 in its relationship dropped $11 from where it was to where it went, and it dropped from being a premium to Brent all of a sudden to being a discount to Brent. And it's stuck at that through July. Now, a lot of things are going on in the Asian market. Saudi significantly lowered its official selling price for the volumes it was able to get out and get into Asia. It wanted to hold on to Asian market share, and so it dropped its price. China still hasn't picked up buying, and so there's been a lagging in demand. Because of the closure of the Strait of Hormuz, a bunch of additional supplies got pulled into the Asian market, not just ANS, but a bunch of additional supplies got pulled into the ANS market. And so that increased supply in the Asian market. And then you've had Canadian supplies increase. There's been an expansion of the TMX pipeline, the Trans Mountain pipeline that goes from Alberta over to Vancouver. Surrey, I think, is where the terminus is. And so you've seen additional Canadian loadings into the Asian markets. And so there's a bunch of additional supply going into the Asian markets. But you wouldn't normally think, I wouldn't normally think that you would see ANS drop to a discount to Brent. You would see it sort of restore to its balance with Brent. The reason this has some significance to the budget is, again, the budget's done on Brent. So when people normally think about, well, how are we doing relative to the budget? You're thinking about how Brent is doing relative, how Brent actuals are doing relative to the Brent futures that were used in the calculation in the projections that were used in the calculation of the budget. With ANS selling at a Brent, I mean, when ANS was selling above Brent, we were getting a premium, we were getting additional revenues in, we were looking good compared to the budget because we were selling it above the Brent, and Brent was selling it above the projections used in the budget. But now that we're below Brent and sustained below Brent, you're gonna have to at least I'm gonna have to rethink how I think about the budget, because we're not pulling in as much revenues for ANS as we would typically do compared to Brent. We're having a deep discount for ANS compared to Brent. Those bars out to the far right that look like we're recovering, look like we're going above Brent. That's not really what's going on there. Those are averages. That's a 12-month average, a 6-month average, a 3-month average, and a 1-month average for June. And so those are just averages that are showing the impact of the period during which Brent was high. We are actually continuing the discount on Brent through yesterday. I mean, we were still
Right.
The price for ANS yesterday was lower than Brent and lower than WTI. So it's a interesting condition that we're finding on ANS. Usually not what you see for ANS, but it's sustained over a month now. And, some people are suggesting that it's going to stay that way longer term, because with the disruption of Hormuz and all of the changes that went on in the Asian market to deal with the disruption of Hormuz, all of a sudden the Asian market has sucked in these additional supplies that's creating a surplus in the Asian market. And as I say, U.S. West Coast, the spot price on the U.S. West Coast is sort of the tail on the dog of the Asian market. So we're seeing the impact of that flow through to ANS.
Now, July, of course, when it first dipped below here on the chart, that's the first month of the new fiscal year that they planned this whole budget on. And so we're already upside down in that regard. What do you think that this portends for the rest of the year? I mean, especially if it remains underneath not only Brent, but WTI. What does that do for us with the budget that they have projected moving forward? What does that do for us then?
Well, we're currently running slightly over budget because Brent is still elevated. The current price for Brent is still elevated. Well, the current price for ANS is still elevated over what the projected price for Brent was, but we're heading down fast. And it's going to be what I'm really going to be interested in is what happens once we click over to August. We'll click into a new Saudi official sales price for Asia. We'll click into new contracts coming on or new deliveries coming on from various sources. And if this continues into August, then I'm going to start, paying more attention to those who are saying that we've seen a sea change in the way that Asian pricing works. China also is a factor in here. China famously held out during the early days of Hormuz. If China had continued its normal demand in the early days of the Hormuz shutdown, the price would have spiked to $150 because the demand would have been substantial. But what China did was turn on its storage facilities, reduce its demand, not spike prices in that way, and reduced Asian demand in a way that softened the price impact of Hormuz on Asia. So it's going to be interesting, and China has still been fairly low in terms of the purchases it's making of crude. So it's going to be interesting once we get into August and September what happens to this price differential. But if it continues in this direction, we will soon be underwater. Even though the Brent price would tell you we're above water compared to budget, we're going to be underwater because the ANS price is operating at a heavy discount to Brent. So it's going to be interesting as we get into the first quarter of the new year and see what's going on with the ANS Brent differential and then flow that through to what's going on with the budget.
And if the straits and if their straits remain closed and this Iranian thing drags out for another 6-8 months, I mean, what are the futures saying on that? I mean, what does this say for us?
Well, right now the futures market is saying that the straits aren't going to remain closed. I mean, the futures market is bouncing up and down depending upon what Trump says on any given day. Basically, I mean, if he says, we're going to have World War II bombing raid, a Dresden bombing raid on Iran, then the futures market goes up. When he then announces, no, we're not going to do that he's been talked out of it by the sheikhs in the Middle East, then the futures prices goes down. So that's what's really controlling the futures price. And right now, the futures price is trending down. We're sub 70, I think, over the 5-year period, certainly, but we're getting close to the $70 range, and the projection for the budget is $75. So we're getting close to the $70 range. on Brent, and ANS is below even Brent. So it's we're trending down, but things have changed. It's fascinating what's going on with the ANS Brent differential right now, and whether that is permanent enough or will continue long enough to really do us significant damage on our budget.
Brian said, so Canadians are undercutting us? This aggression will not stand, man. They'll do it politely, though. They'll be like, sorry, but we've got to undercut. Sorry. I mean, those Canadians, they're cutthroat.
Well, the Canadians had a real problem. I mean, they have most of their production is in Alberta, and the only outlet for the major outlet for that supply was down to the Gulf Coast, and so they were priced off WTI, and WTI was already a discount to Brent, and so the Canadian supplies, because of the transportation differential, the Canadian supplies were not doing too well in terms of price. So several years ago, maybe a decade ago, there was a proposal to expand the capacity from Alberta over to the West Coast. That ran into all sorts of problems, permitting, First Nations, all sorts of issues, and so it was delayed, and the Alberta price was low, but they finally completed it, and they've completed an expansion of it, and so that's bringing a lot of Alberta supplies, and it's really increased the price of Alberta supplies, because the netback from the West Coast price is a heck of a lot better for the Alberta supplies than the netback from WTI from the Gulf Coast. And so it's brought a lot of Alberta supplies over to that expansion. Has brought a lot of supplies over to the West Coast. So it's not so much the Canadians saying, oh, we're going to do the Americans in. It's them finding an outlet, them developing an outlet for what essentially were the stranded, shut-in Alberta supplies that couldn't get to the Asian market. Now they're in the Asian market. And a significant share. The second largest supplier to the U.S. West Coast, behind Alaska and barely behind Alaska, is Canada. And so that expansion has not only affected Asian supplies, but it's affected the tail on the dog of Asian supplies, the U.S. West Coast, and is affecting the price on the U.S. West Coast. And
how does that work? So they obviously have American flag tankers that can run back and forth. So they bypass the Jones Act on that, or what?
Yeah, they bypass it because they're coming from a foreign port. They're coming from Surrey.
Okay, right. So they're coming out of Canada directly.
Right.
Well,
it used to be the only way you got Canadian supplies into the U.S. was through pipelines,
right,
into the Northwest, and so the supply was limited. But now that they've opened up that access for big volumes to the Canadian West Coast,
yeah,
they're doing a lot bigger business out of Alberta than they used to do.
Well, interesting stuff, to say the least. We'll see where that goes. Alberta getting ready to pipeline westward. I think that's what Brad was just talking about. This pipe, they're transiting it from the stranded stuff westward towards Surrey. Is that what you're saying?
Yeah. Well, no, they're already doing it, and they're talking about another expansion. I mean, so this has really opened up. It's opened up price because it's no longer the WTI discount. It's opened up price, and the price has had an impact on supply. So they've already taken bids, I think, for the next expansion of the TMX, of the Trans Mountain Express pipeline. So there's going to be more and more Canadian supplies showing up on the Canadian West Coast, which will affect the Asian price, which will affect the U.S. West Coast price. And some suggest, and some suggest we're beginning to see the impact of that. I mean, what these negative differentials are showing is we're beginning to see the impact of what all those Canadian supplies coming to the West Coast are going to do to Asian prices, and then have the backward effect on the U.S. West Coast price,
which again will affect us because they're again tail wagging the dog and all that stuff. All right, well, I would say that's a. I would definitely say that's a problem for Alaska in the future. That's a future us problem, but not too much in the future us problem. Like in the immediate future. We're continuing with Brad Keithley for Alaskans for Sustainable Budgets. On to number 2, the numbers behind the current worries about Southcentral gas. Brad is going to get down into brass tacks Don't let your eyes glaze over. This is important stuff. Okay. So let's go on it.
Yeah, this is numbers day, for good or for bad. So I've been trying to figure out that I can go back and find news stories from last January and February saying that NSTAR is doing okay, it's going to survive the winter, and from Chugach and others saying, okay, we're okay for the next couple of years, and we don't really need to worry about the next couple of years. And then all of a sudden we get to this winter and we're having all these warnings and press conferences and all that sort of stuff. So I tried to started going back and looking at numbers to try to figure out what's really going on. And I found a couple of very interesting numbers that I think tell a big part of the story of what's going on. The first one is from CINGSA. CINGSA is the Cook Inlet Natural Gas Storage area, storage something. And it is NSTAR's storage field, where they take gas that's produced in the summer months and fill storage and have it ready for deliverability for the peaks in the winter months. Cook Inlet production can no longer meet peak demand just from production. You have to store the gas in the summer when there's low demand, and then use that to meet peak demand in the winter. Let's do the other one first, Michael, and then go to this one. So this is CINGSA. This is Cook Inlet Natural Gas Storage, whatever the A is, and it is NSTAR's storage field. And this got several numbers on here. Obviously, it's got injection numbers on the left-hand side. It's got injection and withdrawal numbers. The capacity that NSTAR has, that this storage field has for injections, the capacity it has for withdrawals, and then it has working inventory on the far right-hand side. And working inventory is how much gas is in storage at any given point in time, and you can tell how prepared NSTAR is for the winter. Really interesting numbers going on here. So when you look at the right-hand side and you look at working inventory, the design capacity and the maximum contracted capacity, which are the same thing, for the storage field is 13 million MCF. That's how much 13 billion. That's how much the storage field can hold. And so what you want as you approach the winter is you want to fill up your storage field and have it full and ready to go when you start hitting winter weather. And in Alaska, we can start hitting winter weather in October. So by August 1, you certainly want a big part of your storage field filled up. If you look at these numbers, the design capacity is 13 billion cubic feet. If you look at the inventory numbers, and the inventory is how much is in there, and then the bottom number is available inventory, how much is yet to go, or how much capacity you have that's not yet filled. You can see that the inventory numbers in CINGSA as of August 2nd is only 6.3 billion, 6.4 billion, 6.3 is 6 billion. So 6.4 billion compared to compared to a capacity of 13 billion. Available inventory, that is the amount of the amount of not yet filled capacity in the field, is also 6 billion, 6.6 billion. More than half of the storage field is not yet filled. And that's, when you're sitting at August 1 and you're looking at the winter ahead and you've only got less than half of your storage filled, you're getting concerned. Because the storage, the amount of gas you've got in there determines not only how much you can take out, obviously, how much you got stored and is available, but it also affects the pressure at which you can withdraw. The less gas you have in the field, the less pressure you have in the field, the less gas you can pump out on a peak day. Right. And here's really the worrying number. Even that number is very worrying. The fact you have less than half the storage field filled. But the worrying numbers over on the left-hand side, the injection and withdrawal numbers. And so this is the injection season. This is the season you want to be filling storage. And given that you've only got half storage full, you want to really be going gangbusters. You want to really be filling this thing up. But you look at the injection numbers, the operating capacity of the amount that can be injected on any given day is 206 million cubic feet, 206.320 is the amount you could inject on any given day. The available capacity, that means the additional amount you could be putting in there is 171, which means you're only putting the difference in there. What is that? 35 million a day into the storage field right now. You got a half empty storage field. You're sitting at August 1. You got a half empty storage field. You're only putting 35 million a day compared to a capacity of 206 million a day. You're only putting 35 million a day in there. I can see the reason for the concern. You're not filling storage at anywhere near, the storage isn't filled at anywhere near the level it needs to be, and you're not filling it at anywhere near the rate you need to be filling it to get it to where it needs to be by August 1 or by October 1. Okay, let's go to the other chart. So I started going backwards to try to figure out what's going on here. And this is a very interesting number. This is a chart that the Division of Oil and Gas puts out. It is the capacity of all the storage. Well, it's all of the production sources into the Cook Inlet, all of the levels of production, where the production is coming from, including storage. This is the number from last March. If you look over on the right-hand side, the bottom part of the chart, you can see the production profile, the production numbers, that number, the line, you can see the production numbers for the winter of 2025 and 2026. And if you look at the previous years, you see they go up and then they start coming down. They go up and then they start coming down. 2025 went up, plateaued for a bit, didn't ever really reach a peak like previous years had, and then went back down. If you look at 2025 and 2026, there's something really weird going on. The production numbers go up in December and January, and then in February they start coming down, as is typical. And so you would think in February, okay, we're going to be okay. We got through the peak, and we survived. And so when you look at the press releases that are coming out at the time, the Chugach and NSTAR are saying, okay, we're doing fine. But what happened then is you see another peak hit in March, which is not typical at all across this entire range. You don't see a March peak like what we saw last year. And the chart above, the pie chart above that, shows the sources of supply in March for hitting that March peak. The DNR for its own reasons, Division of Oil and Gas for its own reasons, is dividing production into from pre-2020 wells or 2020 wells and post-2020 wells. That's the blue and the green. The yellow is the production from storage. If you look at this chart for every March going back across time, you very rarely see yellow. If you see yellow at all, it's just a very thin slice of the production for March. But what you see here for March 2026 is a big section, about a quarter of the supply coming out in March is coming from storage. March is usually when you have a typical production period or a typical production cycle, one of two things is going on in March. Either you have a very slight withdrawal in March and you're finding opportunities, frankly, to put gas into storage in March. You've come off your peak and you're continuing production, so you find opportunities to put gas in storage, or you find no use of storage, no withdrawals from storage, and you find all the gas going into peak. And last February, I would think NSTAR would have said to itself, and Chugach and others would have said to ourselves, okay, we got through the peak, don't worry about it. We can now start refilling storage and we'll be okay by the time we get to August. Instead, what happened in March is they had to use storage to meet that March peak demand. And so it did two things. One, it pulled additional gas out of storage you weren't counting on, and it deprived you of the opportunity, because you were pulling gas out of storage. You needed gas from storage to meet the peak. It deprived you of the ability to start filling storage. So you go from there And then you go over to what's going on now, and you can see that what happened was we had to hit storage. They had to hit storage hard in March. It delayed the start point. It took storage down further than I would guess they were anticipating. It delayed the point at which they could start refilling storage. And so now we get to August and we have storage only half full, SINGSA at least, only half full, and not really doing much, not having a lot of gas to go into to help refill SINGSA currently in August. There's another storage field. Hillcorp has a storage field, a commercial storage field that they store third-party volumes in. It's bigger than SINGSA, and so it's got more capacity than SINGSA, but it's not. It's about 3/4 full. It's not full. And if you look at their injection numbers on their field, it's not running much better than the SINGSA numbers are running. So we're going into this coming winter with only, at this point, only half the storage field full, and we're coming in without a real strong stream going into that storage, trying to refill it, getting ready for winter.
And of course, we heard from John Hendricks that that they didn't buy any oil or didn't buy any gas in February. And in fact, in his previous interview with us, he said he's kind of capped. He's only been able to sell 100 million, 190 million, up to 190 million MCF per day. And they've had to shut in some of the stuff that they could produce more, but the demand is not there. So again, are they really looking for it, or is there some kind of artificial crisis? Or, I mean, it just raises so many questions, Brad, and especially for those of us that aren't into the intricacies of oil and gas and everything else, it raises a lot of questions that we can't seem to get a lot of answers on.
Yeah, it raises questions. I mean, there is a question. So February is going to be an interesting month. February, if you look back at the chart that had the March peak in it, the Division of Oil and Gas chart, February is starting to slide down. And so if you're in a normal year, you're saying, okay, we're coming off the peak, our December, January winter peak. We're not having a strong February peak. And so, you know, we can ride a little bit, and we'll have the normal summer. You can tell yourself you're going to have the normal summer. You'll fill storage back up, and you'll be fine by October 1st of next year. So I can sort of see some justification for NSTAR not being overly concerned about supplies in February. That March peak, that second peak in March, came as a surprise. I would anticipate came as a surprise to everybody, because we hadn't had March peaks. So all of a sudden you have this March peak. You have to pull from storage in order to meet the March peak. So not only are you not able to fill storage, you've had to pull from storage, and so you're going into summer now in a much more difficult situation. I would think what Sims has said is he anticipated a bunch of Bluecrest volumes from the Bluecrest field down by Anchor Point. He anticipated a bunch of Bluecrest volumes coming in and helping him refill storage over summer, and they haven't shown up. So he's in a situation. I can see the source of the panic now. He's in a situation where he doesn't have storage where it needs to be. He's not filling storage at anywhere near the rate he needs to be filling it in order to get it ready for this coming winter. And he's looking at a winter that, you know, if it's like 2 winters ago, sort of mild, he'll be fine. But if he has a winter like he did last year, where he has a March peak, he's in trouble.
This whole thing kind of again, it kind of cooks me. What got me and what really irritated me in this, and again, there's so many questions, was this comment from Sims. As you said, Bluecrest plans are not coming to fruition this year. Well, they haven't really been doing any. I mean, it's just, you know, there's a whole lot of nothing coming from Bluecrest. But then Sims is quoted as saying, an Alaska-owned HEX is delivering less than half of what the utility expected, said Sims. And John Hendricks is like, we've delivered 112% of what we were contracted for. And we have more if you want it. Like, you didn't buy any in February, plus we've got more available. What's going on?
Yeah, that's definitely a question. I mean, that's definitely a question to press Sims on, and definitely a question to press uh, Hendricks on. Landfield ran a Twitter last night, a tweet last night that said that Hendricks is selling to Marathon, the refinery,
He
for
said that yesterday on the show.
for its needs as opposed to NSTAR. And Landfield's close to Sims, and so you can sort of think that Sims has put this in Landfield's ear to publish. So there's definitely an issue going on there. I will say this, with all due respect to John, with all due respect to Hex, they're the tail on the tail. It's not. That's not big volumes. It would every little bit helps.
No, he's only providing 10% of the gas for the utilities. That's what he said it yesterday. He's only providing 10%, but he has more. He has some available. He wants to get up to 20. He said it's there. He said, yes, he's selling to Marathon because he can't sell enough to NSTAR. They delivered 112%, but NSTAR now says he says maybe he spoke off the cuff. I don't know. I mean, there's so many questions here, Brad. That's the thing. It just smells bad. What is going on?
Yeah, and the question, and so you can see that with that storage number, the Syngsa storage number, that is a concern. And so you would think, and given Sims's statements otherwise, you would think that they'd be buying every available cubic foot they could out there to stick into storage to get the storage numbers up, to get it ready for winter. So there's definitely a question there, and I don't have the answer to what's going on between those two. But I will say that Hex is sort of the tail on the dog. I mean, even if Hex put full bore, even if Sims bought everything that John had, and John Sims bought everything that John Hendricks had, and put it full bore into storage, that's not going to fill storage. It's going to make a marginal difference in filling storage. The real gap in storage, I don't know where it's coming from. Maybe Sims was counting on Bluecrest for a lot. Maybe there's some shortfall in what he was counting on from Hillcorp. Maybe there's some shortfall someplace else. But when you're sitting at half storage in August, especially in Alaska, if you were sitting in Texas, half storage in August, you wouldn't be that concerned about. But if you're sitting at half storage at August in Alaska, and you're not maximizing the inputs, the injection rate into the storage, you've got to be concerned.
You got 8 weeks. You got 8 weeks to get that thing pumped up to 13 billion cubic feet, and you're at 6.5. How do you get there?
Yeah, well, it's a number. I mean, I really hadn't dug into this. I just was sort of flabbergasted by this whole thing last week about the crisis and all this sort of stuff. And at first, I sort of dismissed it as they're just trying to use an excuse to talk about the big line, trying to pressure the Senate. But then I thought, well, I'll just dig into the numbers and see what the numbers say. And then I started digging in the numbers, and you can see where the concern is when you've got storage at that capacity. So it's a problem. When the history is written of this period, where we have failed is not getting the LNG imports up and running. What we've seen is the Cook Inlet fail faster than we thought it was going to fail. And Bluecrest would be an example of that. It didn't come on with those volumes. And so we're seeing the Cook Inlet fail faster than we thought it was going to fail. We don't have the big line. The big line's not coming. If it ever comes, it's not coming for a while. So where we're falling short is not having the LNG import capacity ready to go. And nobody's really talking about what they're going to do to get the LNG capacity ready to go.
Where's the plan? I mean, because NSTAR wants to build their own big standalone import facility at Point Mac or whatever, and Hillcorp's got theirs there at the Marathon plant where they could retrofit it. But who's running the plan? Who's got the plan? Where does it go? Give me a timeline. Nobody knows. Again, we're all waiting, and that's the thing. We're going to bloviate and wait around and sit on our thumbs until the crisis really begins. And then what are we going to do? That's the problem. Then what are we going to do? We're going to continue on. Brad Keithley, Alaskans for Sustainable Budgets, the weekly top 3. On to number 3, which Adam Crum demonstrates why a lot of Republicans are part of the problem and not the solution. I rolled so hard when I was looking at this stuff. Brad, go ahead and hit us with it here. We're running a little late. We've only got about 7 minutes.
All right. So there was an article in the Alaska Beacon this past week. The article was headlined, "Alaska Providers Say Child Care Gap is Growing." And the article focused on the fact that we have more demand for child care than we have supply. And so the gap between the number of people who want child care, the number of working families that want child care, and the availability of child care, that gap is growing. So, as you would expect, a politician jumped on that. And a few days later, Adam Crum appears on the opinion page of the ADN, the Alaska Daily News, with this opinion piece. "The answers to Alaska's child care problems are within reach," says Adam. And so I thought, okay, well, great. We're going to have a Republican talk about what the solutions to the child care problem are. And I read it, and two things stand out. One is as he articulates the solutions that he advocates for solving this issue. One is to continue to use Alaska's corporate tax structure to allow companies should also allow companies that subsidize or provide childcare to claim those costs. And what he's talking about is the allowance for additional credits against the Alaska corporate income tax for companies that provide childcare. In essence, subsidizing childcare by those companies by reducing their tax bill.
Right.
And the other one in the next paragraph was a grant program. In other words, state spending with accountability requirements, of course, but a grant program to provide money to those institutions that aren't employers, that don't pay corporate income taxes. And so the rest of the world out there that wants to provide childcare, we give them a grant program. We just directly subsidize them with government money. What's not included in Adam Crum's editorial is where the money's going to come from. The money to replace the corporate taxes that now are going to be not collected because of the credit, and the money that's going to come from to replace the grant program. And what's the marginal source of revenue in the state right now? It's PFD cuts. So what Crum is essentially saying, when you boil down, because he doesn't otherwise talk about where the revenue is going to be to pay for this stuff, what Crum's talking about is increased PFD cuts in terms to replace the corporate taxes that otherwise aren't going to be collected, and to generate the revenue to pay for the grants that he proposes, PFD cuts to pay for the increased child care that he proposes. So what we're doing, just think about this. What we're doing is we've got a claim that families, high income, medium income, low income families have a need for additional child care. We're going to pay for it by taxing, through PFD cuts, taxing middle and lower income Alaska families to pay for the child care, the select child care for all middle and lower income Alaska families, to pay for the select child care for the upper income, the middle income, and the lower income families. We're just churning money. We're taking money. He's going to make one situation work better, childcare, at the expense of making the incomes of a lot of the families who need childcare worse. You're just taking money you're robbing Paul to pay Peter, or Peter to pay Paul, or however that phrase goes. You're just taking money out of the very families that you claim you're helping to pay for a select group of families that need childcare. Not only a select group of middle and lower income families, but also upper income families. You're essentially going to have middle and lower income families subsidize the child care of upper income families. And so what's the difference between Republicans and Democrats?
Right.
I mean, the Republicans are saying we need to spend more government money.
Yeah.
On child care, or the Democrats say we need to spend more government money on this stuff. Adam Crum's saying the same thing. Well, we need to spend more government money on this stuff.
And talk about an expansion of government. He says, on the supply side, Alaska's facility permitting process needs a provider by provider review, with one accountable navigator assigned to walk every applicant through the process. Wow. How many people is that? And how much is that going to, I mean, it's astonishing how everybody is looking to government to solve the problem in this regard.
Yeah, Republicans or Democrats. It's always going to be, we got a problem, we'll just spend more government money on it. Or we'll collect less through the corporate tax credit. We'll just spend more money on it. And who's going to pay for that money? Who's going to provide the money? Well, we'll just take more of it out of the pockets of middle and lower income Alaska families. We'll just push them deeper into the economic hole they're already in order to help a select group of them, those who need childcare, including upper income families, in order to help a select group of them to deal with this situation. It's not there's no difference between the Tom Begich position and the Adam Crum position on that issue. If somebody was really concerned about this and wanted to take government money to do it, at least you'd collect it from everybody. You'd look for revenue sources that didn't impact the very people you claim to be helping, that didn't make their economic situation worse. You would look for revenue sources that spread the burden and reduce the burden on middle and lower income Alaska families. But Crum's proposing steps that will increase the burden on middle and lower income Alaska families.
And unfortunately, that's what we're seeing from almost all these candidates at some point or another. There's some program that they can't do without, or something's going. And again, with no plan, or we have these pie in the sky plans with no way of nobody asking, okay, how do we pay for that? Who pays? Right? Yeah. I mean, that's the crisis here. 30 seconds, Brad. Final thoughts.
Well, it's the same thing as the K through 12. I mean, the question always should be who pays. Every editorial should say, I want to spend money and this is how I'm going to pay for it. But the Republicans, like the Democrats, are just out there saying, I'm going to spend money and don't address how they're going to pay for it, leaving open the fact it's going to come from middle and lower income Alaska families through increased PFD cuts.
Well, we're going to see. What are we, 14 days away from the primary? We'll see whose ideas are sellable. It's just not one candidate who's worth an absolute shit at this point. I mean, really, when you look at this, I don't see a candidate who just reaches out and grabs me by the throat and says, dude, we got to fix this. It's all perpetuation of the same cycles of pain that we've had so far.
Yeah, Michael, I was reading through. So the Beacon, the Alaska Beacon, has published its campaign materials. They interviewed all the candidates, or they sent a questionnaire to all the candidates. All the candidates, both the candidates for governor and the candidates for the legislature, as well as, I guess, the federal candidates, responded to it. And I was looking through the responses of the candidates for governor, and I was hoping to find one that said, we've got to focus on families first, and we've got to restore the economic strength of families. One way to do that is not to tax them as heavily as we have been through PFD cuts. I was looking for a candidate that would start with families and the economic situation faced by middle and lower income Alaska families. Start with families and say, we're going to fix that first, and then from there we will have a general fix or a general recovery in the economy, because we focused on families, not households first. Not one of the 17. Now, there were a couple of candidates who didn't respond, but not one of those who responded said that. Some of them said, we're going to focus on families. And then they said, by spending more government money on families, like Adam Crum, we're going to focus on families. We're going to spend more government money on them, without addressing where the revenues are going to come from to provide that additional spending. It's a wasteland out there in terms of candidates who are really focusing on the core economic issue important to Alaska families.
No, it's definitely frustrating, and especially when you look at it, personality wise, yeah, there's a couple candidates that I really like, but what is the solution? And nobody's, and of course, I get some pushback on this, because they immediately say, well, they don't want to lay out their full fiscal plan before the primary, because then, because they're delivering bad news and they wouldn't get anywhere in the primary. They can only do that in the general. And I'm like, look, if somebody's not going to buy it in the primary, what makes you think they're going to buy the bad news in the general? your plan that's going to cause some hardships. There's going to be some austerity measures. There's going to be some other things. What makes you think that they're going to want to buy it in the general if you don't want to sell it to them in the primary? Again, I don't understand the justification here.
Oh, it's the typical government. We'll get to your problem. Don't worry about it. We'll get to your problem. Just hang on. We'll get there. I mean, they're going to say the same thing in the general. Well, I can't say it in the general now because, I got all these other people in the general and I want to win the general. So I can't say it in the general. It's, if a candidate isn't willing to step up and articulate a family first, family values campaign, economic campaign in the primary, I don't trust them to show up in the general, and I certainly don't trust them to show up once they're governing. The first candidate I went to be honest, I paged down to get to Shelley Hughes's. I wanted to see if Shelley was evolving her pitch in a way that started to resonate with me, and it's not. I mean, it's basically it's a different way to come into the spending cuts only approach, but it's basically a spending cuts only approach, and we saw with Dunleavy that just doesn't work. I mean, and we got a bigger deficit now. We got a bigger deficit now than we had at Dunleavy's at the beginning of Dunleavy's term. So
yeah,
to think that spending cuts only is going to resolve this is just foolish.
Craig says there's zero chance that our state legislature would agree to any conservative fiscal plan. So what's the point? I mean, I don't know, Craig. What's the point of getting out of bed this morning if it's going to be so bad and doom and gloom? I mean, you can't stop fighting it. But see, that feeds right back into what Brian was saying. He says, what I fear is a much lower than average turnout because of the terrible slate of proffered candidates. The union hacks and lackeys can turn out the few votes necessary to fully control the state. I mean, if everybody feels like Craig and it's like, what difference does it make? Then why bother to show up, Craig?
Yeah, and so I want to show up. I mean, I want to have somebody to vote for, but there isn't anybody to vote for. So, I mean, Brian's point's excellent. I mean, if you don't show up, if you don't show up for some candidate, then those who do show up, the unions and education unions are going to determine the outcome. But who do I vote for? I mean, do I vote for Shelley, notwithstanding the fact she doesn't have a plan that works? It's just it's a very disappointing. It's a very disappointing campaign in that regard.
Fixing the legislative makeup is the only solution, says Craig. We've been trying that, and that's the thing. How do you change out the players where their constituencies are happy with it? You know, where the Gary Stevens and the Louise Stutes and the Bert Stedmans and the Bill Wilikowski. I mean, most of these people don't have opponents, Craig. They don't even have the Republican Party's not running anybody against Wilikowski, right? Nobody else is going to run against Bert. Nobody, we've tried that. So I don't know, man. I just, yeah, you're right. Would it be an uphill battle with this legislature? Absolutely. But do we just stop trying? I don't know. I'm gonna have to hold my nose and vote for somebody in this jungle primary. I wish there were better candidates. That's all I could say. Better plans. But anyway, Brad, thanks for sharing with us and bringing us in and giving us the depression. I appreciate that. It's good. We got to have this kind of conversation, though. We appreciate you coming in, Brad. Thanks for being part of it today.
Michael, as always, thanks for having me.
It's always educational, Brad. Always educational. Thank you so much.
Well, that's a wrap for another week's edition of the weekly top 3 from Alaskans for Sustainable Budgets. Thank you again for joining us. Remember that you can find past episodes on our YouTube, SoundCloud, Spotify, and Substack pages, and keep track of us during the week on Facebook and Twitter. This has been Brad Keithley, Managing Director of Alaskans for Sustainable Budgets. We look forward to you joining us again next week for the next edition of the weekly top 3.